Today is Holly Westerfeld. Holly is Vice President of Sales for Krause Agency, and our subject that we're covering today is crisis planning and having solutions for all. I can't tell you how often we've been asked by our agents about what do I do? How can I help my client if my client has already either gone through their LTC coverage or is in a crisis mode where they're starting to spend down their assets and income? Is there anything at all that we can do? I want you to know that we have teamed up with Krause because they are the subject matter experts. Much the same way that you might be a subject matter expert in the area of Medicare or life or long-term care or annuities, Krause specializes in this area, and they are the foremost authority in the country. And we brought Holly on to give us a good overview of some of the complexity, but actually to show you a very simple way where you don't have to be the expert. You just have to be actually the connection for your client. So Holly, thank you very much for joining us. And I'm going to turn it over to you if you want to share your screen, and we'll get started.
Absolutely. Well, thank you, Dennis, for that. And thanks for that wonderful introduction. It's wonderful to get to talk to you all. As Dennis said, we really focus in at Krause Agency on those solutions for people that might be beyond what could be helped with long-term care. And so we're going to talk a little bit today about that and what that is and how you can help these folks. So I'm going to jump right in. I'm going to start just with a really brief overview of Krause Agency for any of you that aren't familiar with us. We've been doing this for a long time. Our agency's been in existence for over 30 years. We work with attorneys, agents all across the country. And we really focus in on asset preservation solutions, specifically for people that are needing extended care. Our flagship product is the Medicaid compliant annuity, which is just a revolutionary tool that we really honed in and created expertise on. And in addition to that, we also, offer all the traditional solutions, the long-term care and all of those type things for the pre-planning side. Today, though, we're going to focus in on this Medicaid annuity and how you can help people that may not have other options on the table. So today's goals, I'm going to provide you an overview of what crisis planning is and how this annuity fits into the picture so that you kind of understand where a customer might be, to identify somebody that might be able to be helped. And then we'll talk about how you can take advantage of this referral opportunity and kind of what's in it for you. And so we'll start with the overview of what is crisis planning and this annuity. So crisis planning is really designed to help people that are currently in a care facility or are just ready to enter one within the next 1 to 2 months. And it helps them to accelerate eligibility for Medicaid while at the same time preserving assets for their spouse or for the next generation. So what happens there, if they have exhausted any of their Medicare benefits, which we all know are fairly limited, or if they have traditional long-term care, this can help them in those situations. Or if they failed to plan ahead or had health issues that they weren't able to qualify for traditional long-term care insurance, and Medicaid's their only option, this is a solution that can help them. Once they're eligible for Medicaid, then Medicaid's going to pay the majority of the care costs minus the small copay, which is usually like their Social Security and any pension benefit that they may have. The key point here, though, crisis planning really is for people that are in a situation that they're looking to qualify for Medicaid, but it will allow them to preserve their assets while they're in that process. So let's talk a little bit about Medicaid, how that works, and so that you have kind of an overview and a picture of that, because I know a lot of people aren't as familiar with this world. So Medicaid is a program that is joint between the federal government and state governments, and it's designed to provide financial support for medical expenses for people with limited means. When people are qualifying, they have to meet some very specific financial and non-financial criteria that varies in every single state. So this world gets really complicated when you're looking at all the different state rules. But some things are consistent or generally consistent among all states. In order to get long-term care, extended care Medicaid. You have to be 65 or older or blind or disabled. Also have to be a resident of a Medicaid-approved facility and a U.S. citizen or a qualified non-citizen. The income levels, there is an income test, and basically the person that is going into the facility or the institutionalized individual, their income has to be less than the cost of their care or the cost of the facility. And generally, that's a general rule across most states. But one big key to this planning strategy is there is no limit for the income of a spouse that might be remaining at home. So we'll talk a little bit more about that in a minute. The other side of this test is an asset test, meaning that the institutionalized person can keep about $2,000 worth of assets in most states. Separate from that, the spouse that remains in the home can keep an allowance of up to $157,920 for 2025. That number does adjust annually. So just remember, it's just slightly under 160,000. It's a little easier that way. So what are assets, and what counts for that $2,000 or that $160,000? Well, things that are countable and are things that we have to protect or that we work to protect are things like the bank accounts, the cash they have on hand, any stocks or bonds, real estate outside of the personal home that they live in, so any vacation homes, rental properties, those type things, vehicles outside of one vehicle that can be maintained for transportation purposes, and IRAs. Most states consider those countable. Things that are exempt, however, are the primary residence, a single vehicle, any personal property, so any of the furniture, the jewelry, all of that kind of stuff is exempt, and a funeral expense trust is also exempt. So what happens and how do we get to this, $2,000 for the institutionalized individual or the $160 for the spouse that remains in the home? Well, you have some tests and some things that happen that Medicaid really looks at and digs into. One is you can't simply give it away. You can't just say, here, kids, here's the stocks and bonds we own, and then give it to them and qualify for Medicaid. It doesn't work that way because they will, it'll create a penalty period, which will make that person ineligible for Medicaid benefit. So what crisis planning does, it helps create a plan to properly spin down the assets, which can include a lot of different things. There's plenty of things that can be done. For one, you can make improvements to anything that's exempt, or you can purchase an exempt asset. So the primary home, if it needs any kind of repairs, you can do those. That one vehicle that can be kept, that can be upgraded or things like that. Certainly you can pay off any existing debts or liabilities. You can purchase a funeral expense trust. And then beyond that, we can purchase a Medicaid compliant annuity. So we'll talk about that and kind of what that is. So at its heart, a Medicaid compliant annuity is a single premium immediate annuity that is structured to meet the requirements of the Medicaid program. So it's not just any single premium annuity. It has got very specific terms. It's got very specific setup, and they're very different from an annuity that you might be more familiar with. What it does and what its purpose is to convert those assets, those extra accountable assets, so the stocks, the bank accounts, whatever it might be, into an income stream. But we have to do it in a way that has zero cash value. So in the context of crisis planning, that MCA allows the client to preserve those assets, those excess assets that are above the $2,000 for the institutionalized individual or above the $160,000 for the spouse. It lets us preserve those that are above those limits and accelerate the eligibility for Medicaid. So what is this and kind of what are some of the highlights? Well, you can do this in a short term. We can actually, in some cases, go as short as a 2-month term on this annuity. It has a minimum premium amount of $5,000. It is guaranteed issue. There's no maximum age, so we can do this even somebody that's 100 plus. And it is available in 49 states plus DC. The one state that we do not have a product eligible in is New York. There are also some other states that it's not as commonly used, such as California, who doesn't have an asset test for Medicaid qualification. But in general, 49 states plus DC, this product is available and can potentially be a solution. So who's the right person for this kind of planning and for this kind of asset preservation? Typically, the clients that we see are very middle class. It is middle America. It is people that they have some assets, but they're not rich, and they're not, you know, in a position that they have no assets to start with. They've got some, and they want to protect those. But because of the cost of care and the cost of a benefit at a nursing facility, they're at risk of losing that life savings to the cost of care. So it is only appropriate. We only do this planning strategy at the time of need. It is not something you use to plan ahead. It is only at the time that the person is in or going into that facility. So it is always kind of a last minute thing. It is always just right at that moment, or like I say, somebody's already in the facility, already maybe spending down, paying out of pocket for that facility cost. We can help people in that situation as well. We see average issue age on this product around 80 years old. That tends to be about the time people are going into care. The average premium, or the average amount of assets that we protect for a married couple, is about $151,000, and for a single person about $68,000. So to give you an idea of kind of the type of client that this is right for, or what we see, those are averages. We see things certainly well above those numbers in some cases, and we also see some cases that are smaller than that. But on average, those are the assets that we are able to protect and preserve for people. So when is it appropriate? Well, it's appropriate if they are already in a facility that is Medicaid approved, or they are about to enter one. It is not appropriate, like I said, as a pre-planning tool or something ahead. It's only when they are already in that facility or ready to enter one. When they have assets that exceed Medicaid's limitations. So if the spouse at home can keep approximately $160,000 and that's all they have, then we don't need to do this strategy. But if they have more than that and some money to protect beyond that, then definitely we can look at it. They also need to have exhausted all of their long-term care or Medicare benefits that they would have for extended care. So if somebody had a long-term care policy, and let's say they had 3 years of benefit, as that is running out in their last couple of months, this is a strategy that we can use to continue their care, to transition them to Medicaid, and then to preserve the assets that they have left. And then the final thing is they really have to be expected to stay in that facility indefinitely. This is not for somebody that's expected to recover and be able to return home. It really is crisis planning that will lead someone to end of life. So I'm going to give you a couple of examples, just a couple of quick case studies that I think clarify this and make it a little bit more real. So the most common strategy that we use when working with this product in these cases is for married couples. I will go through a single person strategy in a moment because we do those as well, but most of the time it is married couples. And so what happens there, the spin down amount, the excess assets, those over the $160,000 that they have, we end up putting that into a Medicaid compliant annuity for the benefit of the spouse at home. That spouse that's remaining in the home can choose any annuity term they want. So it can be 2 months, it can be 5 years, anything they want, as long as that term is shorter than that spouse's Medicaid life expectancy. So there's a table of life expectancies that is used for this. And as long as the term is shorter than their Medicaid life expectancy, we can set that term. The excess assets then are eliminated for Medicaid purposes, because if you'll remember, I told you in the beginning, there is no income limitation for the spouse at home. So what we're doing in essence is we're taking those assets and we're converting them to an income stream. Once the qualification for the institutionalized spouse has happened, the income and assets of the spouse that remains in the home, or the community spouse, are no longer counted. So this has a lot of benefits. It gets immediate eligibility for Medicaid for that institutionalized spouse, so they can start receiving benefits immediately. And then it helps the spouse that's remaining at home to have a reliable monthly income stream, because otherwise, a lot of times these spouses that remain in the home, when their institutionalized spouse's income is now going to pay for care, they've depleted their assets. A lot of times, they have a real struggle to meet their daily needs. So this helps them to avoid that impoverishment. What we see on average for a term in this scenario is about 26 months. So roughly 2 years on the term on these is average. But like I said, that can go anywhere, from 2 months all the way up to whatever their Medicaid life expectancy is. So really depends on the scenario, what needs to happen there. So what happens economically, assuming that the spouse that is in the home outlives the term set on the annuity, then the couple can preserve 100% of the spend down amount by using this Medicaid compliant annuity. So 100% of all of their assets that were countable over $160,000 can be preserved when there's a spouse at home. Because the assets are eliminated, the ill spouse, the one that needs the care at a facility, qualifies for Medicaid benefits immediately. The spouse at home then gets to supplement their income and can ensure that they maintain their lifestyle. And then as the spouse receives those annuity payments, they can keep those funds beyond their original resource allowance. So that creates some opportunity for us as agents to look at how we can help that spouse now that has those funds or those assets turned to cash. Are they young and healthy enough for long-term care insurance? Is there a life insurance need? There's a lot of conversations we can have with that spouse after that money has gone through the annuity process and been returned to that spouse. But it's a great result when you have a married couple, because we have protected or preserved 100% of their assets. They haven't lost any of them. The spouse gets immediate Medicaid eligibility, the one that's in the facility does, and then the one at home avoids impoverishment. So it's a great result in the case of a married couple. With a single individual, it does work a little bit differently. So the most common strategy we use for a single person is what we call a gift MCA plan. So what happens in this case is that the person that is going into the facility gives away approximately half of the countable assets. So those that are over their resource allowance, or over their allowance, which in this case would be $2,000. They give away half of it. And what that does, it intentionally creates a penalty period, which is called a divestment penalty period. So we know that going in, we plan for that. The other half of the assets, the half that we didn't give away, is what is used to pay for their care during the time of that penalty period. So let's say we've created a penalty period of 10 months by giving away the money, then that annuity would be a 10-month term. It would pay the cost of care during those 10 months. Then once the penalty period expires, Medicaid, the person is Medicaid eligible, Medicaid takes over, starts paying, and that additional half that we gifted away in the beginning is preserved for the heirs. So it's a really great result in this case as well. Even though we can only protect half of the assets, it's still half of the assets versus zero. So it's a really nice way to help in a single individual case. In these cases, the average annuity term tends to be about 12 months. So they're a little shorter because we are only using the annuity to fund the penalty period. The benefits of this is that we are able to achieve Medicaid eligibility sooner than if nothing was done at all. And we create a wealth transfer. So we protect those assets for the benefit of those heirs of the person. So what happens economically? Well, after the penalty period expires, the annuity is done, it terminates, and then the institutionalized person is eligible for Medicaid. The client, they're able to qualify for those benefits much faster than if they had done nothing at all. So if they had just spent their assets and spent it down and done nothing, it would have taken much longer to get qualified. Plus, they would not have protected any of those assets. Then it also creates an immediate and guaranteed wealth transfer to the family. And Medicaid can't recover against that because it was done in a compliant way. In most cases, with this single person strategy, we are able to save about 50% of those countable assets. And then, like I said, you qualify faster and you ensure that the heirs are able to inherit some of that estate. I mentioned briefly an opportunity, and this is a really big opportunity for you to consider as you refer people that might be in this situation. When you have a situation with a married couple and that community spouse or with a single person and their heirs, they're going to be getting a significant amount of cash coming back to them through this annuity process. And a lot of times they need help with what to do with those funds, or they don't necessarily have a plan for those funds. And so it's a great opportunity for you to reach back out to them and talk to them about their options, including life insurance. You know, if there's a need there and they haven't planned, or they want to use that to make a further transfer of wealth. Long-term care insurance. You know, we have a lot of cases where there's a significant age difference in spouses, or somebody needs facility care at a relatively young age, and the spouse at home is able to qualify for long-term care insurance. It's a conversation certainly that can be had. Traditional annuities can be a good option in this case, as can funeral planning. So there's a lot of things once that money is either returned to the spouse at home or to the heirs. There's still a lot of conversation for you to have, and a very big opportunity. And we've created that opportunity and preserved those assets, you know, to create that creates an additional opportunity for you to have more conversation and to be able to help people even further. So I think that's a really great option and something to keep in mind. So how does this work? You know, it's all great. You know, I am sure that as you're listening to this, you probably have some people in mind that are in this kind of case, because I know when we work with the senior population, we hear about it and run into it all the time. So how does it work, and what do you do when you have those people identified? Well, we're creating a referral service that is open to you, and we're going to partner with our partners, our Medicaid planning partners across the country. So what happens here, there's an initial client intake that's going to help determine if they're a right fit. We never want to do this strategy for somebody that you know, doesn't have enough assets to make it worthwhile, that maybe has too many and doesn't need it. You know, we want to make sure that they're the right fit. The referral service, our referral partners also do a full financial review. They help consolidate assets. They talk about when we need to liquidate things like those additional properties and that type of thing. We will connect with elder law attorneys as needed. So sometimes it's required and sometimes it's necessary to involve an elder law attorney to manage some of this paperwork. And so we do that as well. We have partners, attorney partners across the country as well that we work with. And then we design and implement the spin down plan, which can include the Medicaid annuity. It doesn't 100% of the time include that annuity, but many times it does. And then finally, help with filing the actual Medicaid application and ensuring approval. And that ensuring approval piece is really, really big, and something that I don't want to make light of or don't want to skip by, because it is a complicated process. You're filing stuff with the government, and we all know that just doesn't always go smoothly. There's lots of questions, and especially as they start really digging in, as these caseworkers start really digging into the finances and stuff, it can create a lot of questions and a lot of paperwork. And so the Medicaid planning service really will help with all of that and support all of that. So it's a very, very helpful thing for you to have, or for your clients to have. So what happens on your end? You identify the ideal client and have a conversation with them. We don't want anybody referred that you know hasn't had an initial conversation, that it's not okay. We don't want to reach out to somebody that doesn't know they're going to be receiving a call, any of that kind of stuff. So once you have somebody in mind that's ready to go in that facility, or is already in that facility and working on spending down that money, have a conversation with them about, hey, have you planned? Do you know there's another option? Because a lot of people don't. Once you have that conversation and they're interested in talking further, there is a website that's been created that you can provide referral information, which is basic information about the client themselves, their responsible party or the power of attorney or whoever is helping take care of them, very high level, and their asset level, those type things. And then you fill that out, you submit that, our partner picks it up from there, and we'll work through it with the client. We'll reach out to them and handle everything from there. After that is complete, you'll get a follow-up. You'll know that the client has signed on, they have done this annuity, and then you can follow up with them, like I said, for those additional opportunities as they may present themselves. And then there's a little bit of money in it for you as well. So some really great opportunities in this referral partnership. So what can your client expect? If you're gonna share your client's information with someone else, with a third party, I know that is something that I personally really protect and am very cautious about. So once it's been made, the client will be contacted by us or our partners within 1 business day. So we will give a fast turnaround, and that way you can set the expectations with your client or their power of attorney. The partner will also ensure that the client's a proper fit. So that first call is really just a consultation to talk through, what assets they have, all those type things. They will also talk to the client about the fees involved. There are fees for this planning. It is, hours and hours worth of work to do this properly. In general, if you want to set the expectation for your client, they can expect to pay fees equal to about 1 to 2 months worth of care in a facility. So many times, like I showed you in the beginning, our averages are $151,000 protected in a community spouse case. So that small portion of that 1 to 2 months worth of care is going to go to help with the planning. And then if the client wants to proceed at that point, after that initial consultation, then the partner is going to be the primary point of contact. They will work with them to get all of the paperwork done, all of the asset information gathered up, and so on, and continue to work them through the process to get their plan put in place for them. So in essence, that is the process. You turn in the referral, the partner contacts the client has that initial consultation and understands exactly what the breakdown of the service is going to be, what the fees are, how it all works, and then if they agree to proceed, the partner will take it from there. Once that gets placed, once a case is closed, then the referral fee is paid back to you. Some things that we want to ensure, and I want to be really clear about, we are very cautious about protecting the agent-client relationship. So we will ensure that any client information that is submitted through this landing page is not remarketed to. The only purpose, the only thing that is going to happen with these clients is that one of our partners is going to reach out, complete the Medicaid process, and done. So any remarketing, any marketing to the community spouse or to the heirs about additional products, anything like that is all back to you. We will be very cautious to ensure that relationship is protected. I think that's very important. I again, always cautious of referring my clients to others. And so contractually, we are guaranteeing that the only purpose of this is for the Medicaid planning. So how do you submit your referral? How do you do this? Well, GoldenCare has created a website for you to submit that referral. There's kind of a brief picture of it here. The website is MedicaidPlanningstrategies.com. It's MedicaidPlanningstrategies.com. It's on the slide there. And on that website, there's some great information, an explanation of the referral process. There are downloadable resources that you can use and share with your clients as you're trying to explain to them a little bit about how this works. And then, of course, the referral form is also on that website. Now, I want to be clear, we don't expect you to be an expert in crisis planning or anything else. The intent is really just for you to understand a little bit about how it works. And then turn them over. If they're interested and want to talk more about it, let our partner have the conversation. It's no obligation. That consultation is free, and if it's not the right fit, we're the first ones to say, and our partners are the first ones to say, this isn't a right fit for you. We only want to do it in those cases that it's actually going to help the client. So don't be afraid to make that referral. And don't feel like you have to be an expert about it, because that is not the expectation whatsoever. So with that, that's all of the information that I have. Happy to answer any questions that people have, and certainly you could reach out to us. You can reach out to your partners at GoldenCare. They can get information to us or questions to us as well.
Hey, Holly, very, very nice job. And, you know, taking the complex and trying to simplify it. You know, I'm a certified financial planner by training, and I can just tell you over the many years in a former life when I was on that side, working with the elder law attorneys, agents don't want to become the expert. What you want to do is just be the resource. And that's why we created that Medicaid Planningstrategies.com site, is because literally in under 5 minutes, you can submit your name as the referring agent, and then you can also submit the client's information. And then when the client goes through that process, as I said, they'll be in lockstep with you as far as the communication. And I think that, you know, the small referral fee, and by the way, it's approximately like $500, a one-time referral fee. But really think about it this way, as Holly outlined, whether it's short-term care, long-term care, both that we like to call extended care solutions, whether it's final expense, whether it's a med sup, whatever other sources of products that you may be able to uncover, your client is in this crisis mode. And many of them have had relationships with you for years, and they're going to turn to you when they're in trouble, and they're going to look for you to be a resource. And so we wanted to bring this opportunity because, one, it's really, it isn't on your end complex. Your end is easy. You're the connection. You have the relationship. And Holly and their team will be the ones that basically uncover whether or not this is a suitable client. And if it is, they'll go through that process, and then they refer them back to you to handle any other planning. And remember this, it may not just be planning that's with that spouse. It could be other family members who have watched what has happened in this process, and how through this process the client's been able to basically preserve assets, as Holly indicated. So if we have questions, I don't know, we've got Lynn on the call, if we want to put them in the chat box, or if Lynn, is that the best way, or are we going to open this up? I thought Lynn was still on with us, but maybe she's jumped off. But so I'm trying to see here if I see any. Holly, do you see any questions in the?
I do not see any questions right now, so we can leave it at that. If you want to contact me directly, my email is very simple: hollywestervelt@kraus.com.
Okay. Hey, Holly, let's just have them reach out to GoldenCare on that. Okay, that would be that way we keep the line of communication with. Reach out to your team at GoldenCare. Any of the regional directors there can help you, because we have put together this partnership with Kraus for the sole purpose of just this area of emphasis, which is the crisis planning. Kraus is also a partner with us on some of the other products and services that we offer through GoldenCare, but this is just the very specific area that we felt that there's over 5 million Americans on Medicaid long-term care services through Medicaid. So it's not as if it's a small area of opportunity.
Submitted in, is there any way to protect the home from Medicaid
Yeah, the primary
clawback
risk.
once both die?
Sometimes, and I would say it gets dependent on the specific state and the specific circumstance. So sometimes, and if somebody's worried about that, that's a good opportunity for submitting a referral and letting them talk to an expert that can really dig into their own case and let them know. But yes, sometimes.
Yeah, there's the great thing about this is that there's not a one size fit all. There's a lot. The roadmap is very similar, but as Holly said, it's very specific to whether or not you're planning for two, a married couple, or you're planning for one. Mm-hmm. And again, the main thing is just think about this client of yours who, instead of saying, no, I can't help you, that's not my area, what you're extending to that client is the opportunity. And when you are a problem solver, and really you're directing them to the source here with the team at Kraus that can actually solve that problem, boy, they are going to be extremely happy. And the opportunity again for other referrals and other services that you're going to be able to have is going to come back to you, many times over. So I would just tell you that we have seen this for years, and we were not comfortable with some of the other folks, but we're very comfortable with the team at Kraus, with a network of over 6,000 attorneys, 30 years of experience, and they have several of those products are proprietary products that they have in the Medicaid compliant annuity area because of the volume that they do. So again, we want to just make sure that you can see how easy it is by going to the website and being able to submit your name and then submit your client's name as Holly said, to kind of run up the flagpole, so to speak, to see if this is a client that is suitable based on their situation.
Okay, we had another question come in, and we're still getting questions. Good. The next one is, how does an LTCI partnership plan affect an MCA?
Yeah, so the partnership just allows additional assets to be protected. So if they had, $300,000 in LTCI paid out under a partnership plan, then that would go on top of the resource allowance that they had. So depending whether it was single at $2,000 or the married couple at $160,000, then the partnership protection goes on top of that. And then any assets beyond that can still be protected using a Medicaid compliant annuity.
Good question.
Okay. We also have, is the fee paid to Kraus or the referral partner? Is it a somewhat flat fee or based on assets?
It can be based on assets, and it's paid to the partner because it's very, once we make the referral, the partner is the one working directly with the client in most cases to handle this.
Okay.
That's why having that vast network, Lynn, of elder law attorneys is so important, because you want to make sure you got coverage in all states, and also not like you just have one in-house attorney that's handling this for the nation. So
okay, another question: who is the carrier used for MCA?
We do have a handful of carriers that we use. Our primary carrier is Elko Mutual. We also do a lot of business with Unity. And then there's a handful of others depending on the situation that we will use if needed. But those are the two primary carriers that really focus on Medicaid annuities specifically.
Okay. I'm not sure if there are any others being submitted as we speak, but we don't have any others popping up, so that may be the end of our questions.
Okay.
Thank you for leaving the slide up there with that MedicaidPlanningStrategies.com website. I will be sure to include that in the follow-up email as well.
We want to thank everyone for taking time and certainly out of their schedule to learn about this opportunity, because, again, you want to make sure you have solutions, not just for those who are the insurable folks, but those who are already in that crisis mode. And I want to thank Holly and her and the folks at Krause Agency, and thank her for her time and for her excellent overview of this area that is, that, again, you don't want to become a subject matter expert. You're already an expert in the other areas of business. Turn it over to an expert and be the resource. And I think you'll find that that website will be very easy for you to navigate. It's we made it very, very simple as far as the process. And there is additional information, as Holly indicated, to kind of educate you a little bit more so that when you're talking to clients, you have enough information to be able to share with them what that process will be like for them if they decide to go forward. Holly, any last words?
No, Dennis, I would just love to say thank you to you and to GoldenCare for the opportunity for this partnership. We know that there are millions more people that could use this help. And so, we appreciate everyone's ability to help us get that word out, to help more people, to preserve these assets. We appreciate the partnership with GoldenCare. As Dennis said, we partner on other things as well, short-term care and different things that we do. And couldn't ask for a better partnership. And so we're so thankful to be able to extend it and to share our expertise in this area, again, to help more people. So thank you all for that opportunity and for the opportunity to present today.
Thanks, everyone. Everyone have a great rest of your day, and until we talk with you again on another GoldenCare webinar. And as you know, just check the GoldenCare website and look for those other webinars that will be ones that you'd like to join. So thank you again, everyone, for joining us today.
GoldenCare is looking forward to serving you with new tools, new products, new innovations, and always the best support in the business to help you succeed in 2022. So give us a call at 800-842-7799 or check out our website at www.goldencareagent.com.